Going self-employed is the dream until you remember that you have to figure everything out yourself, including health insurance. There's no HR department, there's no open enrollment packet on your desk. It's just you, a browser tab, and a whole lot of confusion. But getting covered as a self-employed person is totally doable. You just need to know where to look, what actually makes sense for your situation, and here's the part no one talks about: how to get the IRS to help you pay for it. Hey y'all, I'm Nikita with Collective, and today we're breaking all of that down. And watch till the end because I'll be covering one of the most expensive mistakes you can make on this hunt. Let's start with the landscape. When you're self-employed, you have 5 main paths to health insurance. One is the ACA marketplace, also called Healthcare.gov or your state's equivalent. This is where most self-employed people land, and for good reason. We'll go deep on this one in a minute. 2, a spouse or domestic partners plan. If someone in your household has employer-sponsored insurance, getting added to their plan is usually your cheapest option. 3, COBRA. If you recently left a job, COBRA lets you stay on your former employer's plan, usually for up to 18 months. The catch, you're now paying 100% of the premium, which can be eye-watering. Think of it as a bridge, not a destination. 4, professional associations or group plans. Depending on your industry, you may be able to access group health rates through a trade association, freelancer union, or industry group. Freelancers Union, the National Association for the Self-Employed, and many industry-specific organizations offer this. 5, health sharing plans. These are not insurance, and that distinction matters. They're cost-sharing arrangements where members contribute to a pool that pays out medical expenses. Lower monthly costs, but significant coverage gaps and no guarantee of payment. If you go this route, go in with your eyes open. For most self-employed people watching this video, the ACA marketplace is going to be your primary move. So let's actually dig into how it works. Healthcare.gov and state-run exchanges like Covered California, New York, Health, and others exist for people who don't get insurance through an employer. That's you. Open enrollment typically runs November 1st through January 15th each year, with coverage starting January 1 or February 1, depending on when you sign up. But if you recently became self-employed, you likely qualify for a special enrollment period, which is a 60-day window triggered by losing employer coverage. So don't wait if you've just made the leap. ACA plans come in metal tiers: bronze, silver, gold, and platinum. Bronze is the lowest monthly premium, highest deductible. Good if you're generally healthy and you just want catastrophic protection. Silver is the middle ground and often the smartest choice for self-employed people because silver plans qualify for cost-sharing reductions if your income qualifies. Gold is higher premium, lower out-of-pocket costs. Worth it if you use a lot of healthcare. Platinum is highest premiums, lowest cost sharing. Usually only makes sense if you have significant ongoing medical needs. ACA subsidies, officially called premium tax credits, are based on your estimated annual income relative to the federal poverty level. But there's a self-employed wrinkle. Your income can fluctuate. The marketplace will ask for your best estimate. Be thoughtful here. If you underestimate and earn more, you may have to repay some of the subsidy at tax time. If you overestimate, though, you'll get a credit back. One more thing worth knowing: net self-employment income, meaning after your business deductions, is what counts for subsidy calculations. So your bookkeeping directly affects your healthcare costs. Another reason to keep clean books, like you need another reason. Okay, this is the part I really want you to hear because a lot of self-employed people leave money on the table here. If you're self-employed and not eligible for coverage through a spouse's employer plan, you can deduct your health insurance premiums for yourself, your spouse, and dependents on your federal tax return. This isn't an itemized deduction. It comes right off your gross income before your taxable income is even calculated. That distinction matters because it can have positive ripple effects on other parts of your tax situation. In real numbers, $600 a month in premiums is $7,200 a year. At 22% federal rate, that's potentially $1,500 back in your pocket from federal income taxes alone. And some states offer additional savings on top of that. To be eligible, you must be self-employed with a net profit. Can't be eligible for coverage through an employer plan, including a spouse's plan, and the deduction can't exceed your net self-employment profit. This deduction also affects your ACA subsidy calculations because it reduces your modified adjusted gross income, which is what the marketplace uses to determine your premium tax credit. It's a bit of a back and forth calculation, but your tax professional or a good tax tool can help you optimize it. Even still, the self-employed health insurance deduction is one of the most significant write-offs available to you, so don't skip it. When you get to the marketplace and start seeing plan options, here's how to think through the decision without losing your mind. Step 1, estimate your actual healthcare usage. Do you see doctors regularly? Do you take prescription medications? Do you have kids with frequent checkups? Or are you generally healthy and you just want to be covered if something major happens? Your usage pattern should drive your metal tier choice. Step 2, don't just look at the premium. The monthly premium is what you pay no matter what, but also look at deductible, what you pay out of pocket before the plan kicks in. Out of pocket maximum, the most you'd ever pay in a year. This is your catastrophe cap. Co-pays and co-insurance, what you pay per visit or service after the deductible. A plan with a $200 per month lower premium but a $3,000 higher deductible may cost you more in a year where you actually use your insurance. Step 3, check your doctors and prescriptions. Before you fall in love with a plan, verify your current doctors are in network and your medications are on the formulary. The Marketplace Plan Comparison Tool lets you search this. Step 4, consider an HSA eligible plan. High deductible health plans often have lower premiums, and if they're HSA qualified, let you open a health savings account. HSA contributions are triple tax advantage. Tax deductible going in, tax-free growth, and tax-free when used for qualified medical expenses. For healthy, self-employed people, an HDHP plus HSA is genuinely a powerful combo. Step 5, use the tools. Healthcare.gov has a plan comparison tool, and your state exchange may have one too. If the options feel overwhelming, a licensed health insurance broker can help you navigate them, and they're typically free to work with because they're paid by the insurer, not you. Before we wrap, let's quickly cover the mistakes that cost self-employed people the most. Going uninsured just for a little while. There's no federal penalty for not having insurance right now, but one unexpected hospitalization can generate 5 or 6 figures in medical bills. The risk isn't worth it. Forgetting to update your income estimate. Had a great quarter or got a big client? Great! Log back into the marketplace and update your projected income. If you end up earning significantly more than estimated, a large subsidy repayment at tax time can blindside you. Ignoring the self-employed health insurance deductible. We talked about this, but I'm saying it again. This deduction exists specifically for you, so use it. Waiting until you're sick to think about coverage. ACA plans are guaranteed issue. They can't deny you for pre-existing conditions, but you can only enroll during open enrollment or a special enrollment period. Missing the window means waiting. Not working with a professional. Between the subsidy calculations, the deduction optimization, and the plan selection, there are a lot of moving pieces. A tax professional or financial advisor who works with self-employed clients can help you make sure all of it's working together. Being self-employed means you're in charge of more than just your work. You're in charge of your whole financial life, including your healthcare. The good news is that once you understand how the pieces fit together, this stuff is manageable. You have real options and tax advantages, and you have the flexibility to build a setup that actually fits your life and your budget. If you found this video helpful and you're still here with me, be sure to give it a thumbs up and subscribe for more content tailored specifically to solopreneurs. And if there's a topic that you want us to cover, let us know down in the comments. I'll see y'all next time. Bye.